welcome back to the RationalInvestor.com's Daily Brief. Wakey, eggs and bacon. I hope you're all enjoying yourselves this morning. Actually, I went to bread. I think went to bread. Actually, who said that line? Go to bread. Actually, we have one person on the site who's actually a good quote. Actually, I didn't talk to them because I wasn't in the day trading room this morning. Anyway, I got about like 10 thoughts going on in my head right now. Sorry, everyone. Where we begin? Today is Fed Day. Fed Day. Tastes great. Fed Day. Can't wait. So we've been waiting for this, and actually happy February. And actually usually February is a bit of a challenging month in the market, but I will say, holy moly, that January barometer, wow, what a move. I can't remember the last time I saw a one directional move like that in the stock market right through the month of January. So if anything, one thing that I saw that was really cool was Josh, our sort of marketing guru, is already starting to work on a January barometer study, and it looks pretty darn slick what he's putting together. I don't know if he published it yet or not, but definitely something to look forward to there. Lots of good data. And the weird thing is this, like nobody else on the internet does this stuff. And the January barometer and the whole sort of write-up of the political backdrop of last year, the whole thing, I mean, it was just beautiful analysis, and it was spot on the whole year. So I would definitely keep your eyes peeled for that. This is our blog. No, how the heck do I get to the blog? I've told the tech department I sure would love to have a blog post link right here, but they're busy with Discord migrations right now, so I don't want to harass them too much about that. On the dashboard, yeah, this blog right here. And Josh did such a fantastic job sort of quarterbacking the whole interview process and stuff when we were in Portugal. Just beautiful work, just absolutely beautiful work. So over the top impressed by the TRI team. Actually, it's fun announcement, sort of a little bit of precursor, but I'm really excited that we had I wasn't in the day trader room this morning, so sorry, day traders, I missed you. But we had some really cool meeting this morning with Coinigy people. So super excited to maybe get the Bitcoin and altcoin trading talk shows back up and running, and sort of reestablishing a relationship with Coinigy. So I was a little bit busy with them this morning. So a little bit sort of out of it here today. But considering it is a Fed day today, and our rule is we don't trust the market, don't trust anything that you see in the market until 1 full hour following the Fed announcement. And I do find it interesting that how this year, and actually just over the past few years, the Fed themselves has started up, and actually I think it started up about 10 years ago or so. It just shows how long it's been. I've been buried in crypto world, but they now do press conferences to fill up that hour, because I think it was just everybody that was sort of a professional in the market said, okay, don't do anything, just don't do anything, and everybody just sat there watching their watches, waiting for an hour to go by. Okay, now we can believe what you see. So they had to fill in the time somehow. Anyway. So actually something, and you can see Josh already is touting it, something we're going to try and do, be a little bit more public interactive. So if you are watching this on the public stream, maybe pop in and participate. Of late, what I like to do, and we've done it primarily privately inside the site, but what the hell, we'll try a public one here today, is through that hour following the Fed announcement, we just sit there and throw up a screenshot of all the major markets and just sort of comment about the volatility and, point out the traps. And then, of course, through the press conference, I like to highlight some things that Chair Powell says. And I noticed that the whole Chair Powell thing is kind of faded. Not many men say Chair Powell anymore. That's another funny thing to watch is the ladies that have a crush on Jerry. I think they like to call him Chapow. Anyway, so we'll have a public stream through that hour. So FYI, I think we're going to put the daily brief after party on hold, and we'll have the after party through the Fed announcement window. So just FYI on that. Like I said, if you're watching the public stream, I would bookmark, to be perfectly honest with you, all of you people, you are so damn lucky. Because frankly speaking, my vote was that we should not give this information away for free. This information is incredibly valuable. The work that Josh does on these blogs, I mean, this is insanely over the top valuable. And the irony of it all is if bloody mutual fund managers, Kathy Woods, would actually read some of Josh's work, she would probably keep herself out of a lot of trouble. That's how good this information is. So I would suggest strongly that you do yourself a favor and bookmark this blog. And like I said, you're getting a gift, the fact that this is free. So as I said there a moment ago, of course, we just came out through the January barometer reporting window, and Mr. Josh has politely started to work away on the next January barometer report. I got to say, man, this kind of research, I can't believe Josh is doing this for free, but that's what he thinks is best. He is our marketing guy, so I trust his judgment. Anyway, point of the matter here is it is Fed day, so I don't really want to, get too much into reading the tea leaves. What I will say is interesting. I think, if I'm not mistaken, if anybody, right. So Cole says that the Coinigy shows back in the day, and I told the Coinigy guys this specifically today, that man, there were a lot of people who just absolutely love those Bitcoin and altcoin trading talk shows. So if we can get that back up and running, I think it would be really cool to reestablish that relationship and get rocking that. Okay, so back to topic here. If I'm not mistaken, I think Mr. Burry, who recently has suggested be a little bit careful out here, people. This is getting a little dangerous here now. He even put out literally a tweet yesterday, sell everything. And I gotta say, the way that the S&P finished yesterday is a little bit concerning. If we go off the daily chart, I mean, this is, I guess this is our price action here today. But this market just ratcheted higher right into the close yesterday. Bad sign. I think I've told you before, you really don't want to see the market rally into a Fed announcement. Because usually what this means is that they're actually getting the market technically overbought, right? If we go back to that 4-hour chart, we probably see that, yeah, you can see, look at this huge divergence in MACD. Holy sexy, Batman. So interestingly enough, I would not have a problem with actually somebody hunting a short setup right off of this market structure fail. We've got beautiful rolling over of the Williams percentage R. You can see the buying interest is waning. The only issue here, of course, is that we have a Fed announcement. And my hunch is following the Fed announcement, we're probably going to have some really wild gyrations here in price, just to sort of wash out the weak hands. Actually, speaking to Julian this morning, and I have to say, it's another sign of his maturation as a trader. He's turning into a pretty darn good trader. He was actually doing a study watching all of the sort of classic technical buy and sell signals, M's and W's, and then watching, like for instance, Chris and I, let's see if I can just quickly show you. Chris and I, we do an opening range trade, and I've noticed, especially during this sort of don't fight the Fed money cycle, that they are just washing the stops repeatedly over and over and over. I mean, it was remarkable to watch this morning. So this is exactly what Julian was talking about. Classic range traders, you find the range prior to the open, and then Chris has even been working with Johnny Hoagland over there at Top Step a little bit over the past year or two. And then, this is the actual first minute of trading. And look at what they're doing. I mean, they're popping it up to get all these sort of, people that just blindly take the opening range, get them all long, and then boom, see you later. Get those people, they all got stopped out. All right, let's get everybody all short, and then boom, stop them out. I mean, it's just brutal what they're doing. Keep in mind, this is a very lower time frame chart. So be careful out there, people. Probably my number one message to all of you in this market state is this is the part of the market state that's the most difficult to trade, and that is the Fed has been raising interest rates. We always say, don't fight the Fed. People are sort of front running the end of the interest rate cycle, saying, this is it. They're going to stop now. They're going to stop now. And then Jerry comes out and slaps you in the face with another 50 basis point increase, and the whole damn market rolls over. So, as I said, a little bit concerning about the way that they rallied the market smartly into the end of yesterday. We already see the bear divs. They're already there, as plain as day, staring you in the face. And I do find it interesting that things like our breadth indicator, technically it's now officially overbought. And this is a really weird one because we're actually in a sell pattern here as the market's moving up. Fast is actually below slow, which is technically bearish. So now we're overbought and we're in this weird bearish state. You saw what crypto did the other day, right? We got up here and then just slam a damn a bang bama. And of course, new bearish market structure, lower highs and lower lows. I mean, it's just a mess. So again, please, people, just be careful with your hard-earned money in this market. This market feels extremely dangerous. What's the backdrop? Obviously, like I said, we got Fed today, so I don't even really want to believe anything that I'm seeing here until probably maybe even halfway through tomorrow. We always say that never trust the first hour following the Fed. But I've even noticed of late, I think I showed you guys like in crypto, really interesting study, although I don't know whether I have, yeah, here. Noticed how like we had a FOMC announcement, the market actually rallied smartly and then puked out the other side, like total head fake. Again, remember what type of market state this is. The Fed, there's no easy money out there. So what's ending up happening, this reference to Julian, he's saying that the market makers are just going after liquidity. So they probably pop the market up here, getting everybody all bullish. Hey, that Beamish guy says W's are bullish. And then boom, right in your face, they just rip your face right off. This one, just right around, exactly around that Fed announcement. Not so much of a rip your face off, but nonetheless, pretty nasty down move. And this is actually what I would kind of expect in here. I think there is some key support. I mean, hell, we're not even really broken down that much here. But could we see a little bit of shenanigans up top here? And then, conversely, could they just puke it out right down here? I mean, we're supposed to, by default, look for 50% retracements. That's just WD GAN 101. So if anything, if I wanted to go shopping again and I wanted to get long, I would really like to see, can I please get a nice healthy consolidation down here to set up maybe the next bull, something along those lines. And that's what I've been sort of posting out here. I'm still a bull and I'm very much bullish. It's just, I don't like this price action up here. This is too far, too fast. If anything, I'd like to see us come back down to, ironically enough, this is where my algo had me sell before. So it would actually be poetic justice if we consolidated a bit, and then the next buy signal basically has me buying exactly where I sold about a few weeks ago. And I often see that happen with algorithms. So that's sort of my prognostication for whatever the hell it's worth. I will say, and I don't know how we're doing on time. I suppose just a quick boo at the current econs. Does this actually affect Fed's decision here in the short term? Probably not. My hunch is they probably already had their decision made. Keep in mind, it's a 2-day meeting. And I would be willing to bet that they probably reviewed the dot plot data yesterday, and that's what they're probably going off of. What's the headlines reading right now? U.S. factory activity shrinks for third month. Job openings rise. Now, here's an interesting thing. I was looking at this jobs openings, and you could actually make the argument that this is where, of course, everybody was freaking out about, COVID and shutting everything down. Obviously, if you're shutting everything down, there's not going to be new job openings. Then the market went screaming up, right? And this is all like, hey, we're hiring, come get a job. Hey, we'll pay you even more money. We'll give you benefits. We need you desperately. Now you can see the Fed raising rates aggressively. It's finally biting. But what the hell's that? Is that a W? Uh-oh. The Fed's not going to like the look of that. So does that mean that the economy wants more workers? They're demanding more? And does the Fed have to go, wait a minute, I told you to calm down, get back down to these pre-COVID levels. What the hell? Looks like a Democrat Biden W. Hey, there you go, Nick. So if that's the case, there's no way the Fed can slow down. They've got to keep ratcheting up. So, and interestingly enough, look where the jobs are coming in: accommodation and food services, retail trade. I don't know whether you heard, but like in California now, if I'm not mistaken, I think they've basically unionized all fast food workers. And they're like, the minimum wage in California right now is some ungodly number. It's something like, I think it's like $15 to $20 an hour or something like that. So, I mean, I have no idea how this plays out. But the point here is that the economy is demanding workers. And unfortunately, if it just keeps, cranking up here, this is going to be inflationary. It's a tough situation to deal with, that's for sure. So that came out today. I'm sure that's not going to help the situation. Earlier today, did have some data coming out of Europe, and they're kind of, I guess they're pleased at the fact that they've got inflation down to 8.5%, when it was 9% last month. And so, ooh, what a big victory. The market was looking for 8.9. So, wow, we got this inflation beast covered. Well, keep in mind, 8.5%, that's brutally high. So they are still well behind the curve. And of course, I don't quite understand it, but ECB still has rates extremely low. So who knows how that plays. Core rate 5.2, still way above the curve. Remember, they really want 2 to 3%. So, as a Canadian Bank of Governor said last week, yes, we are planning on putting a pause on further interest rate increases, but interest rate decreases are not even part of the conversation. And frankly speaking, looking at this kind of situation, we got no business lowering interest rates anytime soon. This stuff has to still calm down quite a bit. And of course, like the runaway socialist Southern Europe, they used to call them the pigs nations. They still are absolute train wreck double-digit inflation rates. So nothing's really changing out of Europe, in my opinion. You can see poor old Sjord. We had a meeting this morning, and he's sitting in like parkas and freezing his butt off, and he's got wearing like 20 layers because, the energy. And what's so sad is natural gas prices are coming down for the Europeans, but because of their socialist governments, they're not passing on the savings to customers. They're just pocketing the profits. Jerks. Drives you crazy. Anyway, so here is our U.S. data that came out this morning. As we said, job openings still pretty damn strong. And the market, huge miss based on what the market was looking for and what actually came in. So that's probably got the Fed a little bit concerned. At the same time, too, though, Chair Powell's been saying, we're going to inflict some pain on you. And sure enough, manufacturing PMI reading below 50, economy is in contraction. So Mr. Powell is getting exactly what he wants. The economy is contracting, and it looks like it's getting a little bit worse, not better. Would be interesting to look at the trend here. Trend, not really anything changed. No M's or W's. Just straight line down. He is getting his wish. The economy is contracting, but it is not contracting enough to actually slow down this jobs issue. Now we'll see how that goes. Interesting. ISM manufacturing equipment is above 50. So there is growth there. And of course, this is all about sort of that Peter Thiel guy. I think that's his name. Peter Zahn. I don't know. I can't remember what the hell his name is. Anyway, he's always talking about how basically the Asian story, China, Russia, they're toast. And how manufacturing is coming back to North America, deglobalization, all that kind of talk. Well, to a certain degree, you can kind of see that. If we just keep making higher highs and higher lows here in the manufacturing sector out of the United States, well, that bodes well for US. And if anything, you're still going to see a tight labor market if they keep migrating the jobs back to North America. And fascinating too, how the US economy seems to be shifting a bit here because, of course, Amazon, Google, I think I even heard Intel yesterday. A lot of these tech companies laying off droves of workers, but manufacturing is actually ticking up. So you can actually see the fabric of the economy is actually starting to materially change here, which is kind of an interesting, cool sign. Of course, open to interpretation down the road. Wednesday is oil inventory day, so always a good idea to check in on this. But it was really weird how we've seen some absolutely insane crude oil inventory shocks of late, massive changes. Remember, we had these builds. I mean, we had a better part of 20 million barrel build in crude inventories. What the hell's going on in this world? So that still seems to be favoring the bears. Interestingly enough, it's not really being reflected in price. So I wouldn't even be surprised if, ironically enough, this goes and M's out and inventories start falling, and then you get a pullback in oil prices. Well, that doesn't make any sense. But anyway, so you can see market was looking for a smaller build. Build came in pretty strong. So, there's still a lot of slack in the crude oil demand. I suppose probably the big thing we want to watch now is what's the weather like in sort of middle USA? Is it massive winter storms? Is it above average temperatures? Of course, that's going to directly talk about gasoline demand. So gasoline stocks, you can see they actually rose more than expected as well. This should be bearish of price, and maybe that's what we're seeing, because I did notice out of the corner of my eye that crude oil prices are coming off here materially. So maybe the energy market is finally seeing that. And also too, interesting to see Canadian dollar also coming off. Canadian dollar is very oil sensitive currency. I don't know whether this is too little too late. Mr. Barry saw that massive rally in the stock market yesterday and was like, oh shit, better get the hell out of everything. Interesting how the S&Ps are just kind of going sideways. It's the brick and mortar, the old economy, legacy economy, Dow stocks that are suffering the most. Notice the NASDAQ, it's not even really budging here. And small caps, the junior market, was interesting. I'll give a shout out to him just in this broadcast. One of our sort of site OGs, although I don't know where the hell I have it. Kevin was on social media the other day pointing out that it looked like the small caps were breaking out, which I thought is an interesting observation. I think he's correct in that regard. But also remember too that the old adage, there's Kevin. The old adage, of course, is, you buy when it snows. So you can see September, October, November, December, that's when you should buy this. And if this silly thing breaks out here, sell when it goes right into April, May, June, that we could easily see the small cap market up top here. Which probably brings me to sort of the final thing that we probably want to talk about in this summary video that we do here for you today. As I said before, probably don't read too much into what you're seeing in price action until we get a good hour or two following the Fed. But we had our Stock Pickers Club meeting last night, and I have to say, the club, they're getting really, really good at what they do. The Stock Pickers Club is really sort of a I really only like to invite site veterans because I know that if we talk stocks, if we talk options, if we talk warrants, and I talk to the public about buying these things, that's just asking for trouble. They'll go all in. They won't use a trading plan. They won't pre-vet their setups. They'll just, if Brian says buy, fine, I'm just going to buy. And if I lose money, I'll call my lawyer. So I don't really like to talk too much in the public unless I see something that I think looks absolutely beautiful. So on that note, we had a couple interesting. I mean, I wouldn't recommend anybody in the public touch a warrant, but that is a warrant idea. I'd look at the stock just with you guys in the public. And what do you think? Is that, I mean, just look at this chart. You should all be looking at this chart and go, that's got Brian written all over it. I mean, look at this gap. You could drive. This is like the potholes in Vancouver. And they say in Vancouver, the potholes themselves have potholes. That's how terrible. Substitute drama teachers have completely screwed our society. And they don't even have the money to do work on civic things like fill potholes. That's how bad the situation is in my country. Anyway, look at the size of that hole. It's huge. What is that? That's $8.26. So here we are at 5 and change. Or 4 and change, beg your pardon. Could you get yourself a double on a trade like that? I think so. So this was a name that was mentioned last night in our club. And, but does Brian like W's? I mean, you can see what's going on here. No guarantees from the management, of course. Do your own due diligence. Not telling you to buy this. In fact, actually, David, it said perfectly because I led him in last night. I said, all right, David, tell us what to buy. And he goes, I'm not going to tell you what to buy. I'm going to show you what I'm buying, but I don't give a fuck whether you buy or not. And frankly speaking, it's the exact same message to the public. I don't care if you buy any of our ideas or not. And there's no guarantees on the management on any of this stuff. But what I will say is that definitely took my attention. So do your own due diligence. If it fits into your plan, if you do buy tech stocks, I don't know whether this guy's tech or not. I think he is. But if you do buy these junior stocks, I think there's some money to be made on this. And so as a result, I'm in on the buy side. And I think I told you I'm in on the warrant. So I'll probably do a write-up on the site about that later on today. Other names, there was a couple others that actually, these were more sort of a reiteration of names that we had been recently looking at that I even said last night. I said, these are probably worth mentioning. Now, I'm not really a big fan of buying Chinese stocks. You probably all heard me say before, very dangerous. You don't know what the hell the damn Winnie the Poohs of the world are going to do to you. And I've actually seen, we were in a stock called A Perfect World 4 or 5 years ago, and Winnie the Pooh came along and basically stole the company right out from all international investors. So it does happen. Don't kid yourself. But this is a company, I think, out of Hong Kong. The fundamentals, if you can believe them, are quite staggering. And of course, you can see the price action. If Hong Kong, for one reason or another, does come back into the spotlight, this thing's got a hell of a lot of room to move up. So there's something for you to chew on there if you buy Chinese stocks. I don't personally, so I didn't buy that. But there's a few people in the group that like that name. And this other one, I thought this one was really cool. It's Sonim Technologies. And if I understand correctly, they do 5G technology phones. I mean, you can see the chart. Chart should speak for itself. And oh boy, look what's coming in down here. So there's another one for you to chew on. Chris said that, in these videos on Wednesdays, probably a good idea to mention what you were looking at in the SOF club. So there's 3 names for you to chew on. If you are interested in the junior space, I think in the stock market, I think there's some fantastic ideas out there. And that's sort of along the lines of what Kevin was talking about. It looks, and nice call, Kevin. I think you're definitely on the right track. It looks like they're just doing a very typical seasonal trade here. I don't know where the hell this thing tops out. Do we actually get up to bought target levels? Maybe. I mean, I'm not in the business of predicting. That setup looks legit to me. If W's come in, caveat emptor. Probably would be interesting too to maybe even look at a call option, or even maybe even a like a debit call spread on a trade like this, because this is the Russell 2000. It's a big index. So I might even consider that going forward as well. So anyway, we'll give Kevin's note a like there. So good job, Kevin. All right. Anything else we're supposed to talk about here today? Oh, crypto. Probably should mention that. I had as I said earlier this morning, had a fantastic meeting with the people at Coinigy. And I think everybody on the team is super jazzed to try and get those Bitcoin and altcoin trading talk shows up and running again. Of course, we already have some killer traders that we can already bring into the calls. I'm sure Paul making the transition to talking off of Coinigy charts isn't going to be too difficult for him. But super excited for that prospect going forward. So to that end, I am on the path. And actually, somebody even asked in a recent video, Brian, are you doing the $500 into a $100,000 challenge this cycle? Yes, I am, but I'm actually starting with $10,000 this one. So if I could turn 500 into 100,000 last cycle, just imagine the damage we're going to do with 10,000. And so to that end, I have been buying. I think I've told you, if I see weekly W's, I'm coming in on the buy side. There's a few of these that have been Wing out. I've started to build positions. And to that end, I actually like this cripple name, believe it or not. That actually looks pretty good. Starting a position here, did a blog write-up, or I guess not blog, whatever our trading thing is, my journal. So starting to build a position here. And then also I happen out of the corner of my eye, see Digi this morning. I made a lot of money on Digi in the past. I mean, this thing treated us very, very well. I don't think we're quite at the point of, oh my God, it's a runaway bull. I think we're at the point of, all right, well, let's get our bids working down in reload zones and let's start acquiring positions. And I will be buying a lot of crypto over the next year. I can pretty much guarantee you that. And FYI, I believe that this crypto cycle will go into November of 2025. So that basically gives us about 2.5 to 3 years to go and make a whole bucket load of money. Anybody want to join us? It's up to you. I can't, as Ross Perot would say, I can lead the horse to water, but I can't make you eat peanut butter. So it's up to you. But FYI, full disclosure, I am now back officially into buying mode in crypto, and I am starting to accumulate. All right. And actually, also too, this aligns nicely with Kevin's kind of thinking, because in essence, it's the same logic. Russell 2000, that's penny junior speculative stocks. Well, what is penny junior speculative cryptos? And that's what we call the short coins, right? It's the same logic, as we say, same poop, different pile. All right, why don't we leave it at that? That was about a half an hour. Chris, did I miss anything that I was supposed to talk about? All right. Well, I can come up for air. All right. Got it all out. All right. So if you are interested, keep your eyes peeled for the FOMC sort of, I don't know, we should probably have a name for that. The Chair Pow circle jerk. I don't know. God, something. That's probably not an appropriate name. Chief, I can't say that, Cole. But if it, I like that, Half-Ed. All right, we're gonna call it the FUMC hangout. I like that. There you go. So this is why I love this community so much. All I gotta do is just lean on them. They give me all the ideas I need. Thank you, Half-Ed. So stay tuned for the FUMC hangout, and we'll talk a little markets, broader markets. We'll even keep an eye on Bitcoin and Ethereum and stuff through that as well. And we should have some fun commentary. All right. Have yourselves a great day. PMA for the win. All the best. The only thing left, Brian says, bye for now.